Okay, good morning, everyone. Thank you for joining the Foreign Opportunity Day of PTT. Today, we would like to present the performance of PTT and PTT Group for the first half 2017. Let's talk about the big picture first. The oil balance and gas balance. I could say that the picture would be the same. PTT Thailand is the net import country. We import around 80% and from indigenous sources another 20%. And we supply to the refinery in Thailand, totally 6 refineries. PTT is one of the suppliers. We supply to our PTT Group, that is Thai Oil, PTTGC, and RPC. And then we consume the refined product in the country around 82% and export to 18%. So the picture would be the same. But next is natural gas balance. This one, the total consumption of the gas around 4,700 million cubic feet per day. The source of supply combined with domestic and import. For the domestic is around 70% and import 30%. You can see the portion of the Myanmar around 17% and LNG is 13%, improved from first half last year, okay, as the demand of the gas is increasing. And for gas from the Gulf, we supply to our own gas separation plant, totally 6 gas separation plants, and then we extract, like in terms of feedstock, ethane, propane, LPG, and NGL to petrochemical company, and the rest, gas from the Gulf, bypass gas, all together with the import one, we supply to the power producer. Okay, and next, for the in terms of the largest energy company, we still be the same. We are the Thailand largest energy company with the market cap total $59.8 billion for the first half this year. And in terms of the group, PTT, including our group listed company, take the portion around 13% of the total stock exchange market cap. And the shareholder of PTT still the same. The majority is Minister of Finance and another 14% by Vayupak Fund. We still operate with the fully integrated and highly diversified business from oil and gas, the whole value chain, that we can track from the upper right corner that our performance still robust since IPO until now. The CAGR of the revenue and the net income improved 10% and 9% respectively. And in terms of the recognition, we get the many awards from several institutions, including like Fortune 500, Dow Jones Sustainability Index, and also Stock Exchange of Thailand. And next is for the important, PTT is the important of Thailand. In terms of the credit rating, we still in the same rate as the Kingdom of Thailand. From the several credit rating agency, Moody's, Standard & Poor's, and Fitch rating. And also the group company also have the credit rating at the investment grade. And next, this one we would like to discuss about the performance. The key highlight for the first half this year, the key event starting in the Q2 this year, from the highlight and lowlight. Starting with the highlight first, we established the PTT Global LNG, the joint venture between PTT and PTTEP with the stake of 50% each. This one try to carry the business of the LNG related and for the integrated LNG value chain. And we signed the SPA, the share sale purchase agreement with Petronas by the PTT GLI, the subsidiary of PTT GL, to acquire the PL9SB, the LNG liquefaction from the Petronas LNG complex. This we take the stake around 10%. And next is the LPG liberalization. Since August 1st, we try to link the market, the selling price of three sources of supply of LPG, even import, domestic, refinery and gas separation plant. Everyone linked with the market, okay, at the CP price. And P&R, we complete the transfer petrochemical asset that used to be under PTT, 6 company and 1 project study to PTT GC by the 3rd of July, complete already. And for the GPSC, the power company, they have the COD of Bang Pa-in cogeneration phase number 2. And for PTT LNG terminal, 1 phase 2, another 5 million ton per annum already finished in June this year and complete and ready to operate. But for the low lights, PTT and PTTEP, we got the claim from the Montara incident from the government of Indonesia. And PTTEP itself, they got to suspend the S1 production because of they operate in the particular land reform, and they have to suspend temporarily about 23 days, but now they resume back to normal operation. And for PTTGC, they have a major turnaround of aromatic 2 and olefin I4-1. This is the planned shutdown, not the unplanned. And the performance, this one is for the half on half, I mean first half this year compared to first half last year. Every business, almost all business improved, especially the upstream and midstream, PTTEP, coal and gas, except the downstream like oil and trading and refinery got a softened performance, mainly resulted from the stock loss in this period. Okay, and for the finance, the first half this year, we have many activity in the group, even repayment, bond buyback. This one is for PTT only. We buy back US dollar bond around $81 million, and the loan drawdown. For the first half is IRPC, they draw down about 13.5 billion baht. And next, before I go to in each business, we would like to show you the key business driver that have the effect to the performance of the first half this year. Let's talk about the Dubai and fuel oil. You can see that for the first half this year, crude oil price or Dubai reference is improved 40% compared to last year, and fuel oil improved 60% in line with the crude oil price. And for the natural gas, if you can see in the pink color, this is the average pool price. Half on half, the pool price down 5%. This is implied that gas business unit of PTT gonna be better. And for the HDPE and PX for the aromatic and olefin, the spread dropped in both two sectors, 10% for olefin and 5% for aromatic. And for the FX, you can see we have the appreciate about 2.3% compared to last year. Even last year is also appreciate, but this year is have more appreciate than the last period. So it's implied that we're gonna have the FX gain for this period. Okay. And then go to in each business. For E&P, the product price, you can see the liquid or the oil price improved 35%. Even the gas dropped by 7%, but the weighted average improved 6%. So it's gonna be good for performance of the PTTEP, okay? But the sale volume dropped 10%. Come from PTTEP Australasia, they start to deplete, and the MTJDA that cannot send the gas for a certain period, so make the sales volume drop by 10%, half on half. But anyway, the net income improved more than 100% because of the higher average selling price, lower unit cost, and the important thing is the decrease in the DD&A because of the higher reserve of the PTTEP, and also they have the hedging gain and FX gain in this period. Next, this one is break down the EBITDA for PTT operation combined with the gas, oil, and trading. half on half improved 22%, but contributes from gas the most because it's improved about 41%. The rest for the oil and trading dropped by 16% and 17% respectively. For the gas, let's talk about by business unit. The most improved is S&M, supply and marketing, and also the GSP. That is the feed cost lower that I mentioned earlier, that pool price was lower, and altogether with the petrochemical price improved, so it's gonna be good for the GSP. And also this period we don't have any turnaround compared to first half last year. We have a major turnaround of the ethane separation plant and gas separation plant number 6, and NGV still have loss, but this one is consume more loss from the last period because of we have the lower average selling price. And for the oil BU is dropped by 16%, mainly from the stock loss because of if we talk about just only the gross margin is improved, but incur the stock loss, so that's why it dragged down the performance of the oil BU. And for trading also dropped down because of the market downturn situation. Talk about the gas BU. The factor that gonna be reflect to the performance, you can see the fuel oil price improved 64%. Okay, so it's gonna be better from the performance of the business unit that selling price linked with the fuel oil, and the average pool price dropped by 5%. In terms of volume, dropped just only 1%, come from the power producer that maybe source the power from another source like renewable, such as the solar. So it's just dropped 1%. In terms of NGV, the price dropped 3%. Also, the volume dropped 14%. The mainly reason is they come from the lower demand of NGV because they switch from NGV to consume the gasoline and diesel. Okay, so that's the performance gas BU. And then let's talk about the GSP, one of the business unit under the gas. The reference price of GSP, you can see that the HDPE is the selling price of the gas GSP improved 2%, while the feed cost dropped by 15%. So you can see that the benefit is gonna go to GSP because the selling price is higher and the feed cost is lower, so the margin should be widened. And for the gas separation plant volume improved 15%. That the reason is there is no major turnaround in this period compared to last period. So all in all, the gas EBITDA improved 41%. As the reason that I mentioned earlier from GSP, from S&M. Okay. Next, for the oil BU, you can see the petroleum price lower compared to the last period. It maybe indicate that they're gonna have the stock loss because the product price was lower. But in terms of gross margin, you can see compare this period and last period, improved 44% from 0.73 to 1.05. Come from every product, even jet A1, diesel and gasoline. For the jet A1, you can see that they have the selling price with the lag 1 month, and when the petroleum price on the downtrend, so it means that you can sell at the higher price because the price lag 1 month. So that's why we boost up the gross margin of the oil. This one, this is a pure margin. We exclude the stock gain or non-recurring item. And for the volume, it's dropped just only 1%. It's not significant, but we can see in terms of the EBITDA. Even the gross margin improved 44%, but the EBITDA for the oil dropped by 20%. That because of the stock loss that I mentioned earlier. Because this period we incurred a stock loss about 650 million baht. Okay, But anyway, we do have the non-oil attached to the oil EBITDA. For the non-oil portion is improved 8% because of the branch expansion, especially in the coffee shop within the country and expand to neighboring country also. So now the non-oil contribute to the total oil EBITDA around 17%. Okay. And next for the trading, if you see the gross margin drop by 18%. That because of the market downturn. But in terms of volume, it improved 4% because it expand the area of the trading into Latin America and Southeast Asia and Asia. But the EBITDA dropped by 17% because of the market downturn and the reason of the reversal of NRV, net reversal value. I mean, that last period, first half last year, they have the gain on the NRV, but this period, we don't have that amount. So altogether with the market downturn, so the trading EBITDA dropped by 17% for the first half this year. And then P&R. The P&R comprise of petrochemical and refinery, comprise of aromatic, olefin, and refinery. For this first half this year, both aromatic and olefin improve, except a refinery have the soften because of the stock loss also. For the aromatic, you can see improve 57% for the benzene because of they have the strong demand. And for the olefin, improved both HDPE and PP. HDPE improved 2%, PP improved 13%. But in terms of refinery, the gross margin, you can see marketing margin improved from 4.33 to 5.22 because of the better product spread of both fuel oil and diesel. But when you can see the accounting GRM is dropped from 5.20 to 4.59, that because of the stock loss incurred in this period, about $0.44 per barrel. But all in all, the net income for the P&R group improved 25%, mainly contribute from the PTTGC. Okay. And next is the coal business. In this period, the reference market price, the Newcastle price, improved 58%, and our own average selling price also improved in line with the market reference price, 55% also. The cash cost also improved 30%, but the selling price improved higher than the increase in the cost. So it means that the performance of the coal gonna be improved. Even sale volume dropped by 19% because of the mudslide or the problem in the Sebukuk mine. So the net income improved, even the cash cost improved, but mainly from the higher average selling price, which is improved very much from last year, like 58%. And then for the power, first half this year compared to last year, power improved 8%, even the steam dropped 3%. But the net income improved 1% compared to last year. Because of the power, it means the EGAT, they have the higher dispatch in this in this first half this year. And then the coming back from the customer that shut down in the last period and resume back to the normal operation. So it's improved in both volume and the net income. And the committed capacity of the power now in the first half this year is around 1,900 megawatt. Already COD around 1,400 megawatt, and during the construction another 12 million megawatt. Okay. And next, the consolidated performance, you can see revenue improved 20% compare the first half this year compared to last year, mainly from the petroleum and petrochemical price that's improved. So that's why it's reflect to the higher sales revenue. You can see the most contributor is the PTT oil and trading, around 49%. EBITDA also improved 7%. This one mainly from the gas BU. As I mentioned earlier, the GSP is the one to push up the performance, like feed cost decrease and the petrochemical price improve. So that's why PTT gas contribute around 27% for this year. And the next is PNR and PTT-EP, 33 and 32% respectively. And for the net income, first half this year we have the net income 77.48 billion baht. Contribution most from PTT itself, 51%, because we have the improve in our performance, especially the gas business unit. The second one is come from PNR 25% and PTT-EP another 17%. Okay. For the 77.48 billion net income this year, we can say that we have the record high half year performance, and it's contribute from most business. We can break down into each business unit to show you that net income improved 60%. The reason is from the margin improve from almost all the business, and also depreciation drop, so it's gonna be better for the performance because of the PTT-EP. They add more the reserve, so the depreciation was lower. And other income, this period we have the gain from sale of mutual fund and the dividend from the mutual fund. So it's put at the performance around 6.3 billion baht. And for the FX also, in this period we have FX gain and derivative gain. So it's improved for the performance for this period also. So all in all, it's improved 60%. But if you break down by business unit, the most PTT improved, PT itself improved 38% from the gas BU, but oil dropped a bit and trading dropped a bit that I mentioned because of the stock loss and the market downturn for the trading. And for the PTT-EP improved 139% because of they have the reduce in the sales volume. And for the P&R improved 34% because of the better margin of both olefin and aromatic. But for the refinery, it get the softened because of the stock loss, even though they have the marketing gross GRM improved, but include stock loss, so the accounting GRM was lower. And then for the other affiliates improved 52%, mainly from the PTT NGD, which is the selling price linked with the fuel oil. That you can see that fuel oil in this period improved compared to last year. So better for the PTT NGD and PTT ER, the core business also improved from the higher average selling price. And the extra item that I mentioned, we got the dividend and gain on sale from the mutual fund, so-called the EPIP fund. Okay, so all in all, the performance improved 60% compared to last year. And then the statement of financial position, the asset dropped by 2.6%, mainly from the PP&E because of the depreciation expense in this period, and also the cash and cash on hand and a cash equivalent drop from the dividend payment and from the group, and then the debt repayment from in the group also. But the ratio is still very strong. Net debt per EBITDA this period is 0.63 and net debt per equity 0.17. Compared to the policy that we set, net debt per EBITDA not should be less than 2, and net debt per EBITDA should be less than 1. So it's still a very strong, and the credit rating also at the sovereign level. Okay, and the This one is we already announced the capex by the end of last year. Gonna be the picture of 5 year, around $10 billion dollar. But during June this year, we have the revised half year. We have the revision for this year only, 2017. We revise up the capex from 83.6 billion to 93.9 billion, mainly from the LNG value chain, the opportunity investment, and for the LNG land purchase for the LNG terminal 2. But the rest will be the same. Okay. And next, the dividend. This one is a picture of last year performance. We paid around 16 baht per share. But this year, we're gonna have get the board approval for the interim dividend, and we're gonna announce later. Okay. So let's talk about the outlook for the second half for this year. The first half, the gas price, the Henley Hub is a gas reference price in the U.S. gas is $3.10 dollar per MMBTU. But we see that the whole year gonna be in the range of 2.9 to 3.6, so it's gonna be improved because the U.S. can export more LNG. It means they have the strong demand for U.S. LNG. So we see the price gonna be improved. And for JKM, for the first half is 6.29, and for the whole year gonna be improved in the range of 6.1 to 6.9. Also because they're gonna have the strong LNG demand in the Southeast Asia. Then Dubai price, the first half this year is average 51.4, and the range for the whole year gonna be 50 to 55. So it still track the range because of the OPEC and non-OPEC. They still maintain the production cut. Even the shale is coming up too much, but it still be in the range of our projection, 50 to 55. And for the refinery margin, this one is Singapore GRM. The first half is 6.42 and gonna be improved in the range of 6.4 to 6.9 for the whole year because of they have the strong the crack spread for both gasoline and fuel oil. The gasoline because it's gonna have the tight supply from the refinery shutdown, and the fuel oil they're gonna have the high demand for the bunker and the refinery upgrading that gonna produce less fuel oil, so it's gonna be the tight supply for the fuel oil. So the crack spread gonna be improved and resulting in the better GRM for the whole year. And for the petrochemical, both olefin and aromatic gonna be softened compared to last year because of they have the improving demand from the China and from India and Saudi Arabia. We would like to say that supply gonna be more in the market, so it would pressure the spread for both olefin and aromatic. And that's for the performance and the outlook for the first half 2017. But just I wrap up for you for the first half this year. I can summarize that the performance improved in almost business group except the oil trading and refinery. Okay, and the gas price remain low even though start to pick up, but on average still maintain low, and oil price start to increase. And for the performance of PTTEP, this first half this year they improved because of their average selling price improved, even the sell volume drop a bit. And then for the gas PU improved because of the margin and the volume, mainly from the GSP and supply and marketing unit. And for the oil, the pure margin improved, but the performance dropped because they incur the stock loss. And petrochemical and refinery, they improve from aromatic and olefin or the petchem side, while the refinery side softened from the stock loss. And the GPSC, they have the better net income from the industrial customer, and also the volume improve from the higher dispatch from the e-gat. And looking forward for the whole year, we believe that the global economy still firm, and the oil price could be in the range is $50 to $55 per barrel. Feed costs expect to maintain, even it start to pick up, but on average to maintain, not too high. And petrochemical spreads slightly soften, and the one we have to keep an eye on is the bidding process of expiring concession within this year. A target to have the TOR for the bidding by October this year, and it may take around 6 to 7 months in order to finalize the process. So it's the one we will have to follow and keep monitor. So that's all for the performance of PTT and PTT Group for the first half 2017. If you have any question, you feel free to ask. Okay, if you don't have any questions, so I would like to thank you for joining the Foreign Opportunity Day of PTT and PTT Group for the first half 2017. Thank you.